So many years ago, when I was still a young man, I learned this principle from Etienne Marais Jr. Basically from both him and his dad. I don't know who of you may remember Etienne Marais. I mean, they were absolutely amazing consultants and trainers and so on. But they taught me that you first protect wealth and then create wealth, amongst many other things that they taught me. And that's a very interesting principle, or it was very interesting to me at that time. And today I'm going to talk to somebody who's really an investment, like that's where he's built his career. And he's had this realization about the power of life insurance. So we're going to talk a little bit more about how you can protect wealth even long before we start creating wealth. So it's going to be a very interesting discussion this morning. We also have Nikki here. I'm going to share. Nikki, sorry, Lalani. Lalani is here this morning. I'm so used to having Nikki on. And then also I'm going to be talking about how you can effectively or make your onboarding process more efficient. So let's get the show started. Looking forward to a great episode. Good morning. I have no idea what I'm going to do next year with the song. I don't know how we make it even more funky and better and all of that. Anyway, so good morning. I'm just like, sounds like I'm assuming there will be a season next year. So let me know in the chat, do you want another season next year? So I can know what you want and what you're looking for. But anyways, good morning. Nice to see you. Thank you very much for joining us. Episode 34 today. Time is flying. We're having lots of fun on the show. So many fantastic guests this year so far. Some incredible topics and some insights and things that we've gained. So thank you very much for joining us. If you're here live, really appreciate it. To do let others know that you're here live and they should be here and that they should join us right this second. That'll be fantastic. But anyways, my guest this morning is Mickey Gambale. It's his second time on the show. I've had him on, I think it was last year. We had some really interesting discussions. And at the time, I fondly remember when we spoke about the whole issue around people trying to take their existing processes and digitize them instead of looking at, what they can do and then rework your workflows even before you digitize them. So I remember that fondly from last time. Something that has been a big part of what we've been looking at as well. But anyway, today, completely different. We're going to talk about life insurance. Not just that. We're going to talk about all things regarding risk and how we can protect wealth first. It's really an interesting thing, particularly because Mickey comes from an investment background. And typically, the more we start focusing on investments, the less we start focusing on the risk planning side of things. So it's going to be an interesting discussion. We've got really a lot of things I want to get through with him. So looking forward to that. Then Lalani is back, not Nikki. Lalani is here, fresh from her trip to one of the global meetings in Brazil this time. And a shame, I can see it's a long trip. And obviously all this flying does take its thing. But she's here. She's going to do the news for us. And then today, one of the things that we see a lot with our Professional Practice 10.0 scorecard, which is linked down below, you can go do that for free. One of the biggest things is that onboarding process. So I'm going to talk a little bit about that and how you can make that more efficient. Anyways, that's it for this morning. Let me say a warm good morning. We're also going to give away some books, of course. Yes, going to give you hashtags and all that stuff a little bit later. Good morning, Terence. Welcome. Nice to see you. We've got Quibus in the house from New Zealand. Good evening there to you, kind sir. Good morning. Cindy, goeiemorgen. Hope you're doing well. Heloise, good morning. Nice to see you. Gillian, nice to see you as well. I'm going to run through this quickly, guys. Nico van Wyk, good morning. Nice to see you. Tinus Brits, good morning. Nice to see you as well. Zeti, nice to see you. It's been a while. Renee, good morning. Nice to see you as well. Elna, good morning. Nice to see you. Thanks for joining us. Salome, good morning. Nice to see you as well. Alfred, good morning. Nice to see you. Thanks for joining us all the way from Pretoria. Bronwyn, good morning, everyone. Happy Friday. Good morning. Good morning, Francis. Nice to see you. I look forward to coming to say hi to you when I'm in Joburg in November. Rafilwe, good morning. Nice to see you as well. Good morning. That's Mr. Dirk Groeneveld, I'm assuming. Good morning. Ferry van die Kerk, goeiemorgen. Nice to see you as well. Rakesh, good morning. Thank you very much for saying hi. Arun, good morning. Nice to see you as well. Yotika, good morning. Nice to see you. Molly Boheng, good morning. Nice to see you. A regular back again. Thank you very much. So, people are saying definitely another season, all that good stuff. Thank you so much. Johan, good morning. Nice to see you as well. And Mr. Frank Agliotti saying good morning. Nice to see you as well. Thank you for saying hi. Grant, good morning, my friend. Hope you're doing well. And I've got Adrian Jordan, and then we've got Russell. Right, ladies and gents, on that note, here is Lelani with the latest news for our beautiful, amazing, noble profession. Here we go.
Yes, good morning, Fransha. You're right. I'm still battling to adjust back to the time zones, but I must celebrate our beautiful country. Every time I come back from the global meetings, I realize what a magnificent country we have. And yeah, we've got one or two potholes now and then we have to sit by candlelight. But we really have a stunning country. And yeah, I think we don't celebrate that enough. So yes, I'm back from the global meetings we had in Sao Paulo in Brazil. And it was wonderful to see the international community again. I'm very humbled to be the chair of the Chief Executive Committee, which means by default that I chair all the CEOs like myself of the affiliates at the Financial Planning Standards Board when we do meet at the global meetings. So I normally arrive a day before because I need to sit with the Financial Planning Standards Board team to make sure that everything for the next day when we welcome regulators and all the other affiliates to talk about our powwow profession and where we are going. So the regulators that we did get an update from was from IOSCO because the Financial Planning Standards Board is an affiliate of IOSCO, and the representative in South Africa is none other than Mr. Unati Kumlana. But seeing that I mentioned Mr. Unati's name, let's just see what's going on at the Financial Sector Conduct Authority. So even the FSCA is a victim of some scams. So we do have people who's unfortunately at this point in time, they call it the impersonation scam, and they are impersonating the Financial Sector Conduct Authority and Mr. Unati Kumlana himself. So what are they doing? Well, they are sending an email, apparently, from Mr. Unati Kumlana, where they ask you to pay a certain amount. And in this instance, the person notified them from Germany to say, hi, Mr. Kumlana, we have somebody, I'm from Germany, and why are you asking me for $10,000 in order to unlock $28 million? So the moment you see that, it's obviously a scam. So the FSCA is sending out a warning to say, please, Mr. Unati Kumlana will never email you with something like that. And I do feel sorry for people who falls for things like this, because it just highlights the level of desperation that is out there, but it also highlights the need for professional financial advice. And as I then dovetailed back to the Financial Planning Standards Board meeting, that was obviously one of our focuses at the global meeting to see how can we leverage the global nature of the certified financial planner designation globally. And we also focused on the risks, the market conduct risks that we are seeing globally. And a lot of people always think, you have a lot of lacquer, you're going away, but it's for 5 days. And imagine being in a board meeting for 5 days. That's exactly what it is. We are in meetings from morning to night with a beautiful banner in front of you that you are from South Africa. And Kirsty Scully, the Financial Planning Institute's chair of the board, was also with me in Sao Paulo. And it's always nice to have a fellow South African with me. But I think we need to really celebrate the involvement of South Africans at the international level. We have Wessel Oosthuizen, who's very involved in curriculum development still. We have Esther Venter, and I know she's so humble, but I know she wouldn't mind me mentioning this. Esther Venter is the mastermind behind the idea of the new global framework, which is knowing, being, doing. And the new standards was actually released last year, April already, or it might have been the year before, Fransha. But it is new standards that came out. And it's really, I'm really proud of South Africa and the certified financial planners we have in our territory. So that's the FSCA. I haven't seen any other mind-boggling, public warnings that had come out. It's normally the same type of warnings where there's scammers, where there's deep fake, when the promises, it's really, I promise you this, the world, and it's really unrealistic returns. So the moment you see that, please tell your clients they need to speak to you. You need to be on their speed dial in order for them to verify that with you. Then yesterday, for those who were online with Advocate John Simpson, I just want to congratulate you as well. Leanne Jackson, the CEO of the Ombudsman Council, reappointed him for a new term yesterday. So congratulations, John. You've really made a very big difference at the Face Ombuds office. And because I worked at the Face Ombuds office for quite a few years, I understand the challenges that the Ombud faced as he entered that office. And that is complaints. The complaints are really, really quite complex sometimes. But let's unpack very high level the annual report that he launched yesterday. So they had an online session, which we shared the link with our members, and I had a few members that came back and said, oh, this is a bit short notice. You know what? FBI style is to share the link immediately the moment we received it. But yes, there was a few members that I recognized that was online with me. And very high level, John covered the significant progress that the office had made. We know that they've closed quite a lot of those old property syndication. And it's just because some of the elements could not be proven. And so the Ombudsman's office could actually not look at those cases. So that was closed. And he also obviously consulted with the Ombud Council in the form of Leanne Jackson, because before they decided to close all those old cases. They've also improved their processes. And one of the questions that I've asked Advocate Simpson is, what do they do with cases when they dismiss it right in the beginning? So they dismiss quite a lot cases which they call no reasonable prospect of success. So if you look at the Face Ombudsman's rules, if there's a case where they can see there's no reasonable prospect for success, then they dismiss the case. So I've asked him, do you at least inform the financial services provider or the intermediary that we've received a complaint, but we can't really help your client, and please help your client? He confirmed yes, and I'm very glad to hear that, because you do want to keep your clients happy. And when an ombud sends that back to you, it's an opportunity for you to mend the relationship. And I always say your stumbling blocks becomes your stepping stone. So I personally love complaints because I see the opportunity in it. He also furthermore spoke about vulnerable consumers, and they actually implemented a vulnerable consumer policy at the Face Ombuds office, where they make sure that there is quick and efficient handling of the cases in the Ombuds office when they look at the vulnerable group of consumers. So that is something which I want to compliment the Ombuds office for. They also work with people with specific needs like elderly or those with disabilities. Then performance and case resolutions. They've received 5,000 cases plus minus in total, and they awarded about 40 million, give or take, in compensation to the consumers. And then the average closing time for cases was about 63 days. And that is a massive improvement from the days I was in the office. So whilst it sounds very long, bear in mind there's a few parties involved in the resolution of cases, and they follow the principle audi altrum paltrum. So I'm not talking about a beautiful Audi Q7 or something. It's audi altrum paltrum, which simply means both sides must be heard. So that is why it sometimes takes a bit long, because sometimes the financial services providers wait until the last day of the 6 weeks that they are given to actually respond to the Ombuds office. Then they also received a clean audit and accountability. Congratulations for that. They've received a whopping, beautiful, clean audit. And then also from the Ombudsman's office, you are more than welcome to read their report. It's available on their website. But for the professional members of the FPI, as Advocate John said, goodbye, thank you for attending us. I hit post on Higher Logic, which is the platform we use for our members, and I did share some high-level key findings for you, but I also shared Advocate John Simpson's press release for you, as well as their report. Then, Fransha, always talk about something in AI, and just behind the scenes this morning, we discovered that all three of us were born in 75. So we are the vintage of the year 75 here today, Mickey and Fransha and myself. But we also spoke about the fact that how we love learning new things. So something about AI In a presentation at the Investment and Wealth Institute Strategy Forum, ethics expert Azini Filabi highlighted the potential risks and ethical challenges of AI in wealth management. Now, remember, they also make use of AI, but also quantum computing. Now, key concerns include transparency, data confidentiality, racial bias, which I've seen a lot, and the accuracy of AI-driven solutions. He also emphasized the importance of financial professionals taking an active role in understanding and engaging with AI. So she actually also noted the growing regulatory focus on AI. And I can confirm that regulators are focusing on that. And if you look at our Financial Sector Conduct Authority's 3 to 5 year plan, they've just about a few weeks or so, they said, here's the updated plan from the Financial Sector Conduct Authority in South Africa. They are honing in on AI, fintech. They are honing in on digital solutions as well, and cybersecurity. And then, Frans, I'm going to close with something that I've picked up. We have also chatted to the regulators about this. If you apply for a digital assets license 1.26 at the Financial Sector Conduct Authority, please remember there's 2 parts to this. You apply for your digital currency crypto asset license, but you have to, within 90 days from that license was given, you have to go FIC to the Financial Intelligence Center, FIC, and you have to notify them, because you have to then register for a different class of accountable institutions. Unfortunately, there's a few people who didn't know this. Not even the compliance officers knew this, and they potentially face some sanctions from FIC directly. Whilst those fines are not big, the reputational risk is massive. So please remember, if you do that, you get your license, you have to go to the FIC, which is the other regulator, to register for that category of a accountable institution. With that, back to you in the studio of the wonderful Somerset West, and blessings, everybody. Ciao.
Brilliant stuff. Thank you very much, Lalani. Appreciate that. Some really important stuff there this morning. So next up, I'm going to talk to you a little bit about some of the insights, one of the insights, not some of them, one of the insights that we gained from everybody that has completed the Professional Practice 10.0 scorecard, and to give you some tips of how you can really benefit from this. So looking forward to a good one. Righty. So this is an interesting sort of insight, I think. So what is the Professional Practice 10.0 scorecard? Well, it's 27 questions that you can answer, and it scores your business on 5 different categories. It gives you an overall score. It gives you a score per category, and then custom advice of things that you can do immediately to improve those scores for those particular categories as well. It's all there. It's all available free. It is linked down below as well. So you can go and do that if you haven't yet. Anyway, so one of the questions is that how effective is your client onboarding process? So you'll see there that 20% of people are saying that it's 5. It's amazing. It can't be better. It is absolutely the best thing ever. But 80% scored themselves a 3. So that means there's quite a few. I mean, it would be interesting if we have the scale on 1 to 10. You know, you might get a better idea. Is this closer to 7 and 8, or is this closer to 5 and 4 kind of thing? But be that as it may, it's scored somewhere in the middle. So I thought, well, this morning I'm going to share with you a couple of ideas around what you can do in order to make your onboarding process a little bit more efficient. But I think ultimately it's really about creating an even better client experience, because that onboarding process, it's really where the techie hits the road, right? Because that's when clients are seeing what is this really going to be like? We've made all these promises, we had all these great conversations, and now the work needs to start. And if the work doesn't flow, and the process isn't easy, and it's not really wow, then all that hard work you put in to get them as a client is going to be, it'll be hurt a little bit in the process. So it's not a deal breaker, but it's definitely something that we want to look into. So there are like 11 or 12 things that you can do. I'm only going to share 4 of them. I actually just wanted to share 3, but I'm going to share with you 4 of them, because one I have to put in here because it has to start with expectations. And I often see that, we don't really take clients through what the process is going to be, explain to them exactly what the milestones are, what the maybe sort of timelines and those kinds of things. So setting and managing expectations early on, right from the start, is really, really important. So you've got to think about, how are you communicating that? Are you communicating that during the meetings that you have with them? When you go through all that, this is what we do, what do you need, blah, 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 all those good things. That's what we then do. Or do you have like a document maybe that would really set everything out, and they can have something to refer back to, because you and I can talk about things, and probably neither of us are going to remember all the things that we spoke about. So giving them something that is, whether it's like a welcome kit or it's just a video explaining things as well. I think something physical in writing that you could either, I say physical, but a document that one can refer back to and find easily, kind of thing is probably the best thing to do. So I just think setting expectations. So that's almost the bonus one, which is the very first one. But then what are the actual things that you can do? Well, first thing is, and I see this all the time, right? So we say to clients, oh, I've got some documents that you need to complete. I'm going to email them to you. And then we email them all like 10 documents at once that they need to go and complete and sign. And it's like, all those good things. So we really got to think about and be intentional and see how we can streamline our documentation and our compliance. So 2 things here is, obviously we want to digitize the process as much as possible, particularly I think from a compliance point of view, those things that has to be disclosed, etc. But how do you combine that maybe with a video that you've recorded where you explain this to them slowly and surely, like a nicely produced video, not some shady thing. But you could do that and then have all of these things like, which of those documents can actually become one document instead of having 10 different documents, so that the client has to sign 10 different times. Is there a way that you can collapse some of those documents? I think another thing with these documents, by the way, is how do you make them sexy? We often send these very sterile, legal-looking documents, which is really annoying and really boring. It's like getting a loan at the bank and you can't read the terms and conditions, but you have to sign before you can get the money. So you just sign, you don't anyway, the bank is going to be. So we don't want to do that kind of stuff. But anyway, so digitize, think about that entire process. Don't send too much information at once, rather break it down. And that's where managing the expectations come in, because you want to make sure that, I'm rather going to break this down and we're first going to ask for this, then for this, then for this. But the client is expecting 3 different interactions to gather that particular sort of things. The other part, obviously, and Leilani talk about the FIC or the FIC now, is obviously something like, if there are some compliance checks that you can automate. So primarily thinking about knowing your client, the FICA stuff. There's a big responsibility on all of us to make sure that you complete those things. And you can't just ask the client, are you a politically exposed person, or, are you committing fraud? Is this laundering? Like they're never going to say yes anyway. So we've got to use technology in order to check those things. So think about those things that can happen as part of the process that makes your job a lot easier. Yes, it comes at a cost, but yes, isn't it worth diminishing your risk to almost nothing by doing that? And often I hear advisors say, yeah, but that I don't work with those types of clients, that profile kind of clients. You'll be amazed what people do. So don't rely on that. So that's the first one, right? So streamline your documentation and your compliance, and don't send too many things at once, right? So that's the second one. Personalize the onboarding experience is the other one. So this is about tailored communication. So we've spoken about client segmentation recently. And if you know your different types of clients in your business, you could have documentation that speaks to their particular situation, their particular circumstances in their particular language that they sort of would follow and understand. So that's very important. So think about retirees, their onboarding is a little bit different maybe from I'm onboarding a new business owner, for example. So those things are a little bit different. The underlying process might be the same, but the information that you present and even the information that you require might be slightly different. Then, obviously, the last one is technology. Like this was the biggest thing this morning, chatting before the time. Like we, and I'm 49 years old now. We know, like just like Mickey, I built machines. Like we learned some programming language. Like we've got this thing that I've got a youngster in my business and they are digitally. No, they're not. They can WhatsApp. That's basically what they can do. And I see that with my own children. I failed miserably as a dad because I did not take my knowledge and transfer it to them. And for that, I must apologize. But be that as it may, we really grew up with this stuff, right? So we were into this and we learned about it and all of that kind of stuff. So, but so can you. So use technology for efficiency. It's so important. See what you can automate. See where you can digitize forms and things. See what could be. Things like Quickly Sign, for example. How can you get them to sign digitally without having to print out things and sign and scan back in? There's little things like that. And yes, all of this costs money, but hell, it's worth it, your time. I promise you this. If you really go and work out what your time is worth, you will be amazed. You'll see how cheap these technology solutions really are. The question is, are you using it? So those are my top tips for streamlining your, I won't say top tips. I've got some more amazing tips, but I can't share that today. There's no time. Anyway, I hope you enjoyed that. Do let me know in the chat, like what are the things that you're struggling with in terms of your onboarding process, and I will respond to that. So that's that. Alrighty, so let's do some quick announcements. I'm not going to play the quick announcements intro today, just for time's sake. It's only 8 seconds, but hell, you just heard the song. So some quick announcements just briefly. So the first one is that we're hosting a masterclass that's free next week, Tuesday, from 9 until 10. It's in collaboration with Gravitas Tax, ComSpace, and TaxSpace. So the three businesses came together, and we're going to do a masterclass on how you can unlock new value streams. It's going to be an incredible session. It's all practical. There's no theory. There's no, it's all real life stories, case studies, and things that we have experienced in practice that we see some of the users do. And we're going to show you how these particular technologies can really help you make money, like in the real sense of the word, not just got to have a CRM, whatever. So these things, when you use them, they actually generate income. So we're going to talk all about that. So it's a free one. You can come and join us. The link is down below in the description. If you can't see it, I added it just as we started. So if you don't see it, just refresh. It will be there. Otherwise, it's propulsion.co.za/masterclass. So it's easy. Or go see on LinkedIn or the emails that we sent and all that good stuff. So come and join us. It's going to be an hour worth your time. So then after that, also on the 5th of November, we've got Ascend. So looking forward to that. This is coming together really, really nicely. Looking forward to get my CBD approval early next week, because we sent that in. So then we can also tell you how many CPD points you get. You get access to recordings for 2 weeks after. You can still earn CPD if you can't be there live. Come and still get your ticket. Our Propulsion members attend for free. They don't pay. If you're not a member, then the cost at the moment, there's a 20%. I want to say discount, but there's a 20% rebate. Then, if you will, you can pay 476 Rand or something to attend this. We've got some incredible keynotes, right? So the first one, Guy Holwell, going to talk about that client experience is the new marketing. We've got Razan Westhuizen closing out the day, talking about marketing today. Those two things, marketing is the biggest issue that we see from the assessments. By far, of all the different aspects, marketing is the issue. So come and join us for that. Sharon Moller is going to talk about what happens beyond the CFP designation. So we're going to talk about that. And then what else we've got? Oh, Rob McDonald is going to talk about financial well-being. So come and join us for that. And then we've got two incredible panel discussions, one on lifestyle financial planning versus financial advice. It's a very interesting topic that I love. And then hybrid advisory models. So also we're going to talk about that. So come and join us on the 5th of November. The link is down below. Go get your tickets. Or if you're a member, go and register your seat. If you're not a member, become a member. It's simple. It's a no-brainer, actually. But on that note, I am ready. So obviously people are probably waiting for me to share the hashtag. Well, there you go. Hashtag playbook. I'm sorry for that. I almost forgot that. So if you want to stand a chance to win The Financial Advisor's Playbook. There you go. This is the book that we wrote. You can win that, and also one of Cobus Klein's 4 books. So we'll do 2 draws at the end of today. So hashtag playbook in the chat, and you will automatically be entered into the draw. So looking forward to that. If you haven't subscribed yet, please consider subscribing. We love seeing that people enjoy what we do. Also, please share this with other people. I like really that's probably the biggest thing you can ever do to help us, is just to let others know that they need to be on a Friday or go watch the recordings or whatever it may be. Right, ladies and gents, that's it. Next up, we've got Mickey Gambale, and we're going to talk about protecting wealth first. There we go, the tech people in the house. Good morning.
Morning, Francois. How's it?
Lekker, and you, Mickey?
Lekker, man. Lekker.
Awesome, and welcome back to the show. Really excited. Totally different kind of conversation today. When we decided on this topic, I went like, this is going to be interesting because, one, we've never done this on the show, so we've never remotely spoken about something like this on the show. And secondly, you're an investment guy. Like, so just tell us a little bit more about that.
Yeah, I never thought I'd find myself talking about a risk and the benefits of risk and life cover and critical illness cover and, you know, death benefits, etc. But being involved in distribution over the last couple of years, I've really seen the power of what it does for families, for individuals, and what a no-brainer it actually is. You know, we focus a lot in financial planning on the investment side of things, and we sort of underestimate, I think, the power of insurance. The power I mentioned earlier, you know, the power of one can never be as strong as the power of many. And that's what insurance is. It's the power of many that you use to your advantage.
Yeah, it's brilliant. And it is about, then you go like, you know, when you do your studies and things, then obviously you learn about holistic financial planning. And anybody's got a different sort of view around that. I, for myself, thought that I have to do every single thing in every single interaction with every single client, which it turns out that was not the case. It was actually a journey with a client over time. But there is like this thing where most advisors and planners over time fall in love with one or the other. It's rare that you get somebody that really loves both, right? So it does happen, but I think it's you over time you tend to gravitate towards one of those 2 areas more. So that's going to be an interesting one that I also want to get into a little bit later. But I mean, you've said to me that you see life insurance as the foundation of a comprehensive financial plan, which is quite interesting, comprehensive one, especially, as you said, in today's investment-focused environment. So, I mean, why are you saying that, and what makes you say that?
You know, Francois, it became very clear to me that life insurance can really provide, I think, the bedrock of a strong financial plan by protecting what clients work so hard to build. You know, we know that investments generate wealth, but we know that life insurance protects it. And in today's environment, heavily focused on investments, it's important for advisors to balance wealth creation with security. We must never forget about balancing that wealth creation with security. Life insurance ensures that unforeseen events, you know, whether it's something like a death, whether it's disability, whether it's an illness or critical illness, that these things don't derail your financial goals. As individuals, we are the generators of our wealth that we then put into the plan to manage. If something happens to us, how does our plan continue to work? And so I really see the power of insurance allowing clients to protect their assets while continuing to grow the wealth that they have created so far, and making sure that you use that as a bedrock of a comprehensive financial plan. That's very important.
You know, like many things, Mickey, in this amazing profession, is that everybody's got their own definition of things. So that's just us, that's professionals that are working in the profession. So we have our own definition. So we can say one word, and then we all have we all think we know exactly what that is. And it turns out we all have a different idea. But even more so with clients, right? So, I mean, clients would hear the word life insurance, and then they typically would think, it's just got to do with when I die. What's the use? Because I'm not here to enjoy it. It's not for my benefit. And it's funny because that should probably be the thing that makes them think, but this is for my dependents, my loved ones, you know, the people that I actually work so hard to look after. But, you know, from that point of view, how do you think advisors can shift that perception for clients, so that they understand that, this is more about living benefits. It's not only about death benefits.
Absolutely, Francois. Advisors for themselves and for clients, and even something I went through, I began to reframe life insurance as a living benefit, not just something that happens, post a death. If I think about things like critical illness and disability cover that can protect us, during our lifetime while we're alive, it gives us security, our clients security when we need it most. If you change this mindset and you don't think of life insurance as something that happens at death, but if you think about it as that living benefit, this starts to shift the focus. And we're seeing life insurance more and more as a way to protect us and to protect our loved ones while we're alive. It makes it more relevant. It makes it more relevant for today. It makes it more relevant for today's concerns. And as advisors, we can help explain these benefits. We can help show how life insurance products can support us now during our lives while we're alive today, how it covers us in those unpredictable moments, and how it adds value beyond the traditional view of here's a payout that happens when I pass away. It's very, very important. I'd say that's probably the most important thing. Something happens to us now, like I said just now. How do we continue to grow our wealth? How do we continue to earn that money to build those investments?
Yeah. One of the challenges, so let me also throw like a stone in the works here, right? Because one of the things with life insurance, yes, and I can't tell you how many of these conversations I've had in the last, I think since COVID probably, but it's been really, I don't know if prolific is the right word, but it's really been prominent in many conversations that I've had with advisors. And there's probably, this was it's a stone in the bush, Mickey, because we're talking about the power of this, but there's also a challenge from a financial advisor point of view, because you spend a lot of time on this, right? There's a lot that goes into the planning. There's a lot that goes into everything around that. And then it gets to underwriting. And it seems like we have no more healthy people left in South Africa, because like the underwriters are ruthless at the moment. Like, and it's not just particular companies, it's all over, it seems. So how does that also play into this? What are some of the things do you think maybe that advisors should keep in mind, when doing risk benefits? Because as I said, there's a lot of time that goes into it. And is that one of the reasons why you think people prefer to focus on retirement planning and investment planning rather than this at the moment?
Yeah, look, absolutely. Underwriting has become ruthless. In a sense, I suppose what we've really seen, happen from an industry perspective is how underwriting has started to underwrite more to the person that they're underwriting, and so they're scrutinizing a lot more. They're a lot stricter. It's quite strange, when you do a bit of underwriting, people say, yeah, but I'm not like that person, so treat me different. And then when insurers do start to underwrite you for you sort of say, well, they're too strict. One of the things that I realized early on, and it was actually by chance, I started many years ago in this industry, and I needed to get some life cover. And one of the actuaries on the life cover side of the business said to me, Mickey, start young. And so securing life cover early is essential, because when you're younger, you're generally healthier. And we know that as you get older, health plays a critical role in terms of the cost of life cover. Now, from my perspective, if I think about it, advisors should be focusing on educating clients on the really long-term benefits of starting early with cover, particularly how this now starts to protect you against future health challenges, because you've bought the life cover. If you get sick, if there's something that happens, well, you've bought it. You're paying that premium, from when you were young. One of the other things which stuck out to me was try by level paying premiums if you can. What are level paying premiums? You pay a level amount. So you can either, the actuaries will calculate it on an escalating amount. So you pay cheaper now, pay more later, or pay more upfront and pay less later. And that makes a big difference as you get older, by paying that level paying premium. And so I'd say to advisors, promote early coverage. Get that peace of mind in your clients, demonstrate a proactive approach to financial planning, and get in there early. That's going to take this conversation off the table about strict underwriting. It's going to take this conversation off the table about you're no longer healthy, your cholesterol's too high, your blood pressure's too high. You don't have those things when you're young. Get in young. And then, there's things like Future Protector. We offer something like Future Protector at Liberty, where we don't re-underwrite you from scratch if you want to buy insurance and you have bought insurance from us earlier on. So look for those nuances, those benefits that you can get out of life cover. And please, guys, start your clients early. Promise you they're gonna reap the rewards from it.
Yeah. So I wanna take you back. Like we were talking about, like I think you said you got your first computer at 7. I was in standard 2, so I don't know how old I was. I was probably 10 or something when I had a ZX Spectrum, by the way. So just so you know, it wasn't even classified as a computer. Yeah, it wasn't classified as such. But so when I just started working, I had this friend / advisor at the time that came to see me. So he started with Southern Life, and he came to see me, and he had all these little cards and things, and I think he was doing his utmost best to explain to me, you know, all these different things around this cover and why I should have it and what it is. And the only reason I said yes is because I couldn't say no, but I had no understanding and no clue of why. Like I don't see why I need this. And one of the questions that now popped in mind as you were speaking is that we need to start, you know, with our clients as soon as possible and with them when they're still young. But how do you break through that notion of like, but why do I need this? Because the generations today have got a very different view on what's important to them. You know, very different view on wealth creation and those kinds of things. How do we break through that, Mickey, that they actually get why they need this? Because we can take it to them, but if they don't see why they need this, or they feel like it's not on their list of importance, or it's not on that bucket list, then you know, any ideas how we can maybe break through? And sorry, I know now I'm coming from the left side here, which is not on the list, but I'm just wondering as we're speaking.
I think, you know, for me, Francois, it's all about making it real. That's how I sort of got this aha moment about the power of risk cover. It was making it real. You know, sitting with younger clients, we all got parents. We didn't just magically appear. All our parents, if we're getting older, they're getting older, if they're still alive. And so I think it's about making it real and showing people in reality what happens. You know, we know that we're living longer. We know that as we live longer, medical enhancements are improving. But we could be sick and live with a critical illness for longer too. So it's about going to those younger clients and making it real, saying, you know, you're young and you're healthy now. How are your parents? Are they still fit and healthy? How are your grandparents? Are they walking around with walkers? Are they bent over? Are they healthy? Are they still alive? Aren't they alive? And really just, I think, simplistically making it real, showing people that this is the journey that happens through life, that you start off young, you're strong, you're healthy, and as time goes by, you do deteriorate. You know, they say there's two things that are certain in life: death and taxes. Well, you know, it's death, taxes, and we're going to be ill somewhere along our lives. We know that's going to happen. And so I think just make it real for clients. Just talk to people about the things that they would see in their everyday lives around them and bring it home for them. Make the connections, join the dots. That's what I would do. When you do that, then that aha moment really, that light bulb goes on in their minds.
Yeah, I love that, because like that's storytelling basically, but it's very real to them. I just heard a story in the week. I was at a meeting and somebody was talking about a young broker consultant who's 22 at the time and how passionate he is and everything that he wants to do, etc., because of an experience that he had where his dad, I think, passed away when he was younger and still at school. Yeah. And if it wasn't for the life insurance cover, he wouldn't have been able to do what he did to go and do. You know, so there's these real stories, and I think the more we can have stories that they can relate to, correct. I mean, that is the only way, right? Because to tell them about death benefits and critical illness and disability, and you know, yeah, maybe you can't work, and your income is your biggest asset, and blah blah blah. All that stuff is true, but they don't connect with that. They will connect with the stories probably. So I love that. So thanks for sharing that. Also, on the other hand, so we're talking about young clients, right? But you just mentioned that we are living longer. However, we are living longer sickly in most cases. So it's just that the medicine is keeping us alive for longer, I guess. So how do we then, you know, also look at that? If you think like, I mean, we're 49, 50, around about there. How do we now, for clients like us, basically, or even older, how do we adjust, or is this something you should also plan for earlier, so that life insurance almost, and the living benefits, all the things that we spoke about, takes all of these things into account, that we will need the cover for longer than what we did previously, probably?
Francois, this is where insurers have really started to innovate, and where we've really innovated again as a company, as Liberty. We've brought things like cancer claim boosters or critical illness boosters to market. So things that you can add on top of what you've already bought. Now, obviously, the ideal is to plan upfront and get as much as you can upfront, but sometimes you just don't know, or you just don't think about it, or it's just not part of the plan. And so having access to, these boosters that you can put on top of your cover really helps you build these additional options into your life insurance policy. If advisors see the gap, advisors talk to your clients about these things, help them create that safety net, help to support them. We are living longer, but we are living longer in a more sickly state, if I can say that. Medicines do keep us alive. Often, something which had very short mortality to it. You would pass away quite soon, say a touch wood from a cancer or something like that. You can now live for 10 or 15 years longer, but you have medical bills along the way. And we know often what medical aids are like. They pay, but eventually they also don't pay, or they don't pay for new types of medicines and that. And so you need to dig into savings pots if you don't have this type of cover. And if you dig into your savings pots, if you don't have these sorts of booster covers, well, then you're not going to leave that wealth legacy behind that you wanted to create. And so think about that. The insurance have really gotten innovative. We've gotten a lot more innovative. We've taken that traditional state product and really thought about how we can enhance it and bring better client outcomes on insurance. That's what we're looking to do.
One of the big lessons I learned many years ago when I was in practice is that, again, we learn these things when we do our NKF6 and our post-grad, diploma in financial planning, all these things that we typically try and plan for somebody's entire life, right? But I quickly learned that clients actually dictate how long they want to plan for. On the one hand, but that's the one part of it. So there's something that we know is right, like that you should be doing this. That's the advice. But then clients said, but I just want to do it for 5 years because my wife is still young. She can get remarried, blah, blah, blah. I'll give her 5 years to get over me and then she must move on. Those are things like, well, but that's not what I would do with my spouse, for example. But you quickly learn that's real planning. Like if you really want to listen to them from that perspective. But that thing also, that particular experience that I had, it was one particular experience that taught me that lesson. And one of the things that I learned, Mickey, was that you've got to, I think when it comes to risk cover, and this is where the financial planner or advisor is really, really critical. And the planning process that you go through is so critical, because you have to make sure that you have just enough, not too much, not too little, just enough, so that you've got more money available, or the maximum amount of money available that should go to if something does not happen to you. So it's not a case of like, let's put the biggest risk policy in place and then you don't have money to provide for your retirement, because chances are realistically that nothing's going to happen to you. Like the majority, the chances are in favor of you'll be okay, right? It's when you're not okay that is devastating. But how do we balance this, right? So if you think about this focus on investments on the one hand versus the adequate risk cover, any tips on how we can get that balance right?
Yeah, Francois, that's so important. Balancing investments and risk cover is absolutely essential to a robust financial plan. We've said up front, life insurance protects wealth, that investments grow. Offering clients peace of mind is very, very important. Advisors should position life insurance as complementary to investment strategies. For example, life cover with benefits like immediate expense benefits. This can help clients have funds readily available. If there's an unforeseen event or unforeseen costs, it can stop them from liquidating investments prematurely. Maybe markets have moved, they're volatile. Maybe there's a blip in the markets. You don't want to cash out on those losses. You can rather use insurance to cover you. And if you do this, you really create an holistic approach to a client's comprehensive protection, and you can meet their growth and security needs. And now, you made a very important point about paying, not too much, not too little, just sort of enough, sort of the Goldilocks, and the porridge, it's just right kind of thing. But that's very, very important. Personally, things that I've seen in the industry dealing with clients buying life cover, building portfolios, clients that are entrepreneurs becoming extremely successful and creating massive tax burdens for themselves in their estates. Now, do you want to give all that wealth away to tax? Do you want to pay 20 or 25% if you're fortunate enough to have accumulated a lot of money away to SARS? We must do that as the laws. That's how it works. But we can buy life cover to cover for that, and make sure that the hard-earned money we've worked for stays behind. And so you got to balance it, but you've got to have a comprehensive plan. You can't just sit on one side of each of the spectrums. You will fall short later on in life.
Yeah. Then one other thing I think which is important to talk about, Mickey, is that, and this has been, like, I've been to so many conferences where this specific topic was discussed, and it's not succession planning. So relax, it's not succession planning, because that's the other thing that's, apart from AI, is probably the thing that's being spoken about the most, and nobody's doing anything about it. But it's this whole thing around generational wealth. The biggest wealth transfer that's about to happen, etc. But it's more than that as well. How does life insurance, I guess, play into this, and can we use it as a tool for creating and freaking sustaining, generational wealth? Because often they say it's not, transferring the money is the easy part. It's the habits and the know-how and all the other skills that you need to really sustain and grow that wealth. That's the hard thing to transfer. But I don't know, does life insurance play a role? Can it play a role? And how do we position it with clients?
Look, absolutely, life insurance plays a role. It can be a very powerful tool for building generational wealth. If you think about it, it can elevate families into a much higher income bracket by providing significant tax-free payouts, and really significant tax-free payouts. Now, this, I believe, resonates with all clients. We all want to leave a lasting legacy, whether it's for our children, whether it's for our grandchildren. So features like a terminal illness benefit, this can allow you to access your life cover payout before your death, which can be used to secure financial family affairs. We need to highlight these sort of potential things to clients. And advisors need to engage with clients emotionally. Engage with them emotionally. Remember, we're emotional beings. We think emotionally. Anyone who says, I'm unemotional, I'm completely rational, well, then you probably are AI and you're that computer on the table and you have no feeling. We're emotional beings. And so presenting life insurance as a family legacy building tool, I think is very, very important. Francois, my investment colleagues may not like if I say this, but I'll give you a very personal example. I'm coming at a point now, my oldest daughter is finishing school. She's going to go off to university one day, or next year. She's going to get a job one day, and she's going to start saving for her own retirement one day. Now, I'm not advocating that she mustn't save for her own retirement. Absolutely, she must start saving, use the vehicles out there like RAs, etc. Take advantage of saving for retirement. But there also gets a point where I don't need the life cover anymore. She does. And so think about if she took over my premium and paid it, because she's the beneficiary and my other daughter is the beneficiary of it one day, and they use it as a mechanism to save for retirement. I can guarantee you the premiums that they're paying into my life cover, there's no ways they'll save that lump sum in an RA. It's impossible. Now, yes, there's risk if someone stops paying, etc., or the policy lapses. But if you're diligent and you use the tools wisely, man, insurance can be extremely, extremely powerful in building generational wealth and leaving a legacy for your families.
Yeah. One other thing that we may have some quick time to talk about is, obviously, this is probably one of the most personal, long-term relationship-based businesses that anybody can build and be a part of, right? So if I think about client relationships specifically, if you want to keep those relationships, you want to build that loyalty, etc. How does life cover then, or life insurance rather? And I do want to clarify, when we talk about life insurance, we're not talking about death benefits. Remember this now, because I see some of the comments here. So we're talking about the all-encompassing risk benefits that's available, right? So depending on where the person is in their life, they may only need one of the type of benefits. So when we say life insurance, we're not talking about death benefits, right? So think about the entire spectrum of things. But how does life insurance encourage long-term client relationships? And also thinking about, like I was at an event recently where we're not talking about reviews anymore. We're talking about annual planning events, right? So you've got, don't have annual review because that's what the law says we must do. We do annual planning reviews, annual planning events. So that I really like. I do subscribe to that. I love it. But then how can we incorporate this into this process as well?
Francois, we know life changes. Life has its challenges. It's continuously adapting. Things we thought we were going to do, we don't necessarily do. Things we thought we weren't going to do, we do end up doing. So life is continuously changing. And this is where life insurance can naturally foster that long-term relationship. As clients rely on regular policy reviews to adjust their cover based on those changes in life. Advisors who offer ongoing support to help clients adapt their policies to meet their needs. Remember, you want to adapt your policy. You don't want to pay too much. You don't want to pay too little, like we said, that sort of Goldilocks area. So whether it's due to life events or financial growth, this continuous engagement, I believe, builds trust, it builds loyalty, and it actually reinforces your role as an advisor, as a lifelong planner in the financial planning sphere. These regular reviews, they do provide us with opportunities to discuss and deepen family relationships. They do provide us with opportunities to better tailor and support surviving members in families. And so this starts to extend client loyalty across generations. So I know one of the things we're always worried about as advisors is what happens when my client is no longer here? Am I going to have a relationship with their children? If you start speaking to families and not to individuals, and you can use insurance to make these adjustments as these life changes come through. You start to create these opportunities for yourself to deepen your relationships with not only the client, but their entire family. I think that's very, very important.
Then, on that note, like something that maybe talks to that as well is around, because one of the things is probably that's become harder and harder, thanks to social media probably, is to differentiate yourself. And what makes you different and what helps you stand out, and what makes client pick you over other financial planners or advisors. Not that I see us as competition, which is not the conundrum, but the paradox here for me is like, we competition, but we're not competition because we're all working towards the same vision. We're all on the same path. We all want the same things for our clients. So in that way, I see us more as collaborators than we are competition. But you do want to stand out for the right reason for the right client. Any ideas how life insurance, by incorporating that in the whole thing as well, could help you achieve that?
Look, absolutely. Planners or advisors who include life insurance in their financial planning, I believe, set themselves apart by demonstrating this commitment to both growth and protection of a client's holistic portfolio. If you think about it, this approach is going to address clients' broader financial health rather than just focusing, say, on wealth building. Clients value advisors who understand their needs and do safeguard what they've built. And this deepens trust and it increases loyalty. And this game is about trust and loyalty. We're dealing with people's money. It's a very, very personal thing. So I believe by offering a holistic financial plan that includes both risk cover and the wealth side of things, advisors can attract clients seeking stability and long-term security. This is going to lead to more referrals. I promise you it's going to lead to more referrals, and it's going to lead to a stronger reputation for you as an individual and as a planner or an advisor in the market. This is very, very important.
Yeah, brilliant stuff. So I have linked Mickey's LinkedIn below. So if you want to go follow Mickey or maybe have a chat with Mickey, you are more than welcome to do that. Mickey, any wise words in ending our conversation today that you want to leave people with?
Yeah, man. Look, life insurance or Kobus, as you say, simple way to put it, risk protection. Man, it's not just about mitigating risk. It's about opportunity. Remember, using the power of the pool here. This is both for advisors and for clients. It really is a tool for securing long-term financial health and for creating a legacy. And this is what we want to do. We want to help people have financial health, and we want to help them create sustainable legacies. Financial advisors or planners mustn't underestimate, I believe, the power of of risk or life cover. It offers protection, it offers wealth creation, and it can really, really be a strong differentiator to increasingly more competitive markets. So, I mean, for many years, I overlooked it. I never thought I'd be talking about the power of risk and the power of wealth protection, but here I am. And man, I'm telling you, I'm sold. I'm a buyer. I'm a believer. And so go out there and go see what this tool can really offer to you, to your clients, and to your holistic financial planning. It is a very powerful tool.
Fantastic, Mickey. Big thank you for your time. Thank you for all the insights. I really enjoyed the conversation. I do want you to stick around, though, and see who wins our books and stuff. And then I'll say thanks to you again at the end. But thank you so much, and hope to see you again soon. We did chat about some other ideas, so we'll probably have you back sometime soon.
Absolutely. Lekker, Francois.
Alrighty, so there you go, playbook, hashtag playbook. So if you haven't put it in, there's 17 people in the draw. Come on, there's 44 people online at the moment. So you can definitely, there's more of you who can enter. If you did win recently, don't enter. But if you haven't won yet, do enter. I just quickly give you a chance to do that. I just quickly want to run through just some of the comments. Thank you very much for all the comments. Really, really appreciate it. So let me just quickly see. Yes, Dirk says one cannot be, sorry, I'm assuming it's you, Dirk. One cannot be a real financial planner without looking at risk and investment. I fully agree with that. So thank you very much. Zeti says, I also love both as it complements each other. Fantastic. Vivian, thanks for the heads up on Adobe, Frank. So obviously Frank gave some tip on the Adobe signing thing I think I saw earlier. Siva says, I love today's topic. The life insurance is indeed the most powerful tool to protect your greatest asset, your ability to work and earn an income. It is. And then Frank, as he always does, I love it how he puts these quotes in the chat. I really thank you for that, Frank. It means a lot. A bedrock of a comprehensive financial plan is to provide for family and loved ones while growing wealth. Mickey Gambale. He also said, I love how Mickey shares his perspective on the value of risk benefits, which is foundational to a sound financial planning framework. And there's many, many more. Yes, so we're already over time, so I'm going to stop there. But thank you so much for all the comments. Right, let's do the draw, ladies and gentlemen. Are you ready? I am ready. So here we go with the first one. This is for the Financial Advisors Playbook. Who is it going to be today? Let me just get my applause ready. Who is it going to be today? And it is, in fact, Stephen Fish. But Stephen, you just won recently, but you haven't won the Financial Advisors Playbook. So there you go. You won a book from Cobus, if I remember correctly. So thank you very much. What a lucky man. It must be where you live. It's absolutely fantastic. Right. Next one for one of Cobus's books. Here we go. And who will it be on this point? Alrighty. And there you go. Zia Bukwa. Fantastic. There's your applause. Thank you very much, Zia. Would you please get in touch with me via LinkedIn or WhatsApp? I don't know if you've got my number or not. If not, please send me a LinkedIn message so I can get in touch with you. But thank you very, very much for participating. It's absolutely brilliant. Righty. So, ladies and gentlemen, there you go. That's it. Another show, another day. Thank you very much. We'll be back next week, same time, same place. I'll be talking about an interesting topic next week. And after that, I've got some Guy Holwell is going to be a guest. Edel Meyer is going to be a guest, and some other people. So really looking forward to that. So incredible end to the year. On that note, have a fantastic weekend. Stay safe, be blessed and prosper, and continue to raise the bar. I love you lots. Bye-bye.